Welcome to Markets Now. I'm Michelle. Work with Vince Boddicker of Farmers Trading Company, and we're seeing mixed to a little bit higher grain trade here today. Livestock futures, little back and forth action in the cattle market, and the hogs are fully lower right now. But Vince, let's start off talking about soybeans first of all. Obviously, that market's been really resilient. We've got a few tailwinds, including China, as well as maybe lower acres and soybean oil kind of making a push here. But can we get above some of these big resistance areas now that we're facing?
I think you can. Whether it's going to be right now or not, I don't know. I still think you have a shot at 11.50 to $12 on beans sometime this year. But first of all, you got to get to a 10.96 and then 11.20 would be those next numbers in that July to get to. If you get in those areas, or even here, if you need some cash flow, you may want to move a little bit. But hopefully, otherwise, if you can wait a little bit, look for that 11 to 11.20, maybe a better place to try to move some cash. Weather-wise, I don't think there's anything threatening there, as you well know. But the lower acres, I do think, becomes into play. But we just may be a little early in the year for most of that to hit us yet.
Yeah. What do you think the catalyst is that we need to push us over some of these next resistance areas? We had a bit of a chart breakout after the WASD, but
I think a lot of it's got to be money flow and interest from the funds of buying it, whether that be an inflationary thing. With right now, doesn't look real threatening on that side of it. But just to get some investor demand in it, it's been such a dog for a couple of years, and and the farmer himself is tired of beans from what happened last year and the potential that they had. So you've got to change psychology, I think, and you're working on it, but it's not quite there.
yeah, we need some more constructive news on China. Is that part of the equation here or not?
It sure would not hurt. When I look at that whole China situation, you got to hope that the Soybean Association is going to be looking at other avenues besides China. I think they've snubbed their nose at us enough times that if they can buy it from South America, they're going to do it versus here. But yes, it's still a big part of what we do. And, when you make that same statement, you look at news stories the last few weeks that China noted that I think it was March and April were some of the lowest import months they've ever had on beans. And maybe it was just March. But if you look at Brazil showing almost a record in U.S. very good numbers on that time frame, you got to come back and say, okay, do you really want to rely on what China tells you, as if we were going to do that much of anything? But thought that was an interesting change of ideas from one to the other.
The star of the bean complex has been bean oil, maybe on news about 45Z, or at least hopes 45Z is going to be extended for a longer term. And do you think soybean oil is got enough oomph to get soybeans over some of these chart areas too, or can't you do that by itself?
I think if you asked that question 10 years ago, I would have told you no. With the new renewable fuels on bean oil and beans, I think the answer is yes, it can do it. We need to get more pushes on that. President Trump is doing some things of not pushing electricity as much, electric cars and transportation as the previous administration. But we still need our senators and congressmen from the Midwest out talking about this all the time. As you and I have talked before, not just to their constituents, but to the country as a whole, and get them to know that it is a safe alternative, but it's a good alternative that's really not going to do much, if any, damage to the environment.
Right. Okay, so the corn market's been pretty ugly here, Vince. Yesterday, new lows for the move in the July contract. Do you think that, I guess, that big sell-off, do you think we're close to that being over?
You hope so. That 440 region should be good support. If you look at corn, every 10 cents down for those even numbers, whether it's 440 or 441 or 431, should be support. And, when we look at historically, if you look at May, coming into planting at first to second week of May, typically you put a fairly decent low in, which you rally to the end of June, early July on, or you put a high in and you're done. And right now you kind of wonder if we're not doing it. And then cyclically wise, anywhere from the end of April till the end of May, On our charting stuff, we're ideally due for 20, 40, and 31-week lows in the corn market. So I think there's some major ones that could come back in and get us a turnaround. But again, are the funds going net short right now, or are they going to stay flat?
Yeah, there's a lot of talk that they're already short in this corn market. So we'll see when we get commitment of traders report. Let's talk about some of the headwinds. Obviously, we know about the big crop and favorable weather, but there's more to it than that, isn't there?
There is, again, you've got good planting conditions, but again, psychology is a lot of it. Brazil with a big second crop in there, which they haven't had for a couple of years. And you look at China talking about they're going to allow DDGs to come in and ethanol both from Brazil, which they didn't do a lot of before. And it all just puts a negative tone on, and you've got to get to the point. Maybe it's more so the last long that's got to get out of this thing and said, I've had enough. Then you can turn it around. And I think that's really what it takes.
How much of a problem has the lower wheat market been? I mean, we're trying to bottom the wheat market here, it looks like, but just new contract close as of yesterday.
We definitely joined at the hip for quite some time in here. And again, as we watched the market this morning, when the wheat started to rally from 5 or lower, corn started to come back. And yes, wheat has definitely been a big part of where it's at. You look at it and say, why? I don't know. But for several months, they have been there and one influencing the other.
Yeah. So do you think that, is the market seeing just some short covering activity here? Is there something else happening? Can we build on the reversals that we're starting to see in wheat?
First of all, like anything you do, you have to start with short covering, and you're maybe at that point that the funds are sold enough in here, and you would think they're not going to add a lot more. But are we to a point that some of those smaller investors that have been long the wheat market and finally saying, are we giving up and getting out? And now you've got the larger investor / the fund maybe going to reverse that and try to buy that back and run it up.
But the perception there in the wheat market has been that we have an improving crop here, right?
Yes. I think we have to look at the last 3 weeks or so in that southern plains. We've gotten rains. It's not perfect, but it's sure a lot better than it looked like dire straits that it did here in early April and late March. But where that crop gets to be when it's done, we'll find out. And like everything else we look at, the U.S. crop is one thing, but we're still a very small player in the world, as you know.
Yeah. We've been hearing about some disease issues in Kansas as the Wheat Quality Council tour goes through. If they start finding that, do you think that's another thing that could help bottom this wheat market?
It sure won't hurt us any. And again, last week I think it was where you started to hear some stories of drought in northern China, which is where a lot of that wheat is at on theirs. Could they maybe possibly come in and do some wheat? That would be maybe a great spark. And there's been a while since they've done any of that.
Yeah. Well, the cattle market, as we mentioned, is kind of mixed in the live cattle this morning. Feeders have seen just a little bit of pressure, but the market is just kind of taking a little breather here, waiting for some cash development.
Yes. And again, cash is going to be king in here, as we know. And I think on top of cash, I think the trade has been somewhat disappointed that the box beef has not reacted better than it has with the cut in kills in the lower kills out there. And as you know, I think this is probably the 3rd week now where we're going to have beef production for the year below year ago levels. And that's been quite some time since we saw that. But yesterday we did get over 349, which did put some new recent highs in that choice box beef. And hopefully we can hold that together and push it higher. And when you looked at the new highs yesterday, the volume on the boxes didn't reflect that we're backing off in demand any place.
Right. And we did hit all-time highs in the feeder market as well here. Some of it, not all of it, was a push from the border being closed because of New World screwworm. Do you think we have most of that factored into prices now?
I think you do. That was, I thought they'd rally, but I wasn't quite sure they're going to go that much. But $6 higher on Monday was a nice close. And even if you go flat here for a while, is it the end of the world? No, still a great price that you haven't seen before. And this market should hold together. We'll see if it does or what might come about. Still, the biggest thing I think it takes to take this market down is some black swan event out there that changes demand and gets that consumer to back away.
For sure, for sure. And we are overbought, so you got to expect some corrections here sometimes, don't you?
You could get 20, 30 bucks off the feeders and hurt nothing.
So much, so well said. All right, hog market. We're back down here today. The back months deep deferred contracts had been hitting some contract highs. The June contract failed about that $100 mark yesterday. What is it going to take to get over those levels, do you think?
I think you got to get lesser numbers, which I think the trade is anticipating coming in the coming months in here, which they weren't looking at earlier. Part of that due to some diseases they think have come about that they weren't tracking earlier. So let's see where it goes. But I think, again, it's a money flow thing. We're getting close to those recent highs, 106, 107 in those summer months. And you've got to get a little push from someplace, whether that be cash hogs and even get that belly market. That seems to be one of the bigger catalysts in that hog market. If you can get bellies to get a rally going and pick up in price in demand, I think it will definitely help get over that hurdle.
Yeah, and those deferred contracts, deep deferreds, are they trading the disease concerns, you think?
I think they're trading lesser numbers, whether they're thinking that's disease or something else, but many indicators out there showing tighter numbers coming as we get down the road. And you have to look at this thing and believe that the cattle market sure isn't hurting those back months of hogs.
Oh, for sure. All right. Thanks so much, Vince Boddicker, Farmers Trading Company. That is Markets Now.